Hi, welcome from Trend Signal for a review of the data and events the week beginning on the 1st of June, start of a new trading month. As usual, the end of last week, being the end of the month, was susceptible to some month-end pressures, as always. And I think the continuing impasse on negotiations between the Greek government and the so-called Troika is also having an effect on the markets, certainly the equity markets. Whilst the FTSE was weaker last week, to the tune of about 50 points over the week, the DAX really did shed considerably more, just over 400 points, nearly 3.4%. So succumbing to the weaknesses as the Greek negotiations reach a conclusion. What that conclusion is not altogether clear at the moment. On Monday morning, the euro was sort of drifting lower and then rebounded a little bit after Greece missed what has been described as a self-imposed deadline on Sunday that's just gone for reaching an agreement with its lenders to unlock or release this aid. Alex Tsipras, the Prime Minister of Greece, has accused the bailout monitors of making absurd demands and seeking to impose harsh punishment on Athens. So not so positive, really. Just having a look at the headlines here from the Financial Times: Euro falls as investors track Greek talks. The deadline actually looms this Friday for repayment of 300 million euros, obviously to the IMF, and there's another 1.2 billion of IMF payments due over the subsequent 2 weeks. So there's a lot to happen here. Many commentators, I believe, seemed very confident last week of a deal between Greece and the Troika, but a deal has still not been reached. Some are saying maybe a last-minute deal is the way to satisfy Syriza extremists that don't want Tsipras to cave in to the austerity, which he will inevitably have to do if a deal is to be reached. There is no way around that. The effect on the markets if Greece fails to make these payments, it's called a default. I assume that Greek assets will fall sharply. Peripheral Eurozone assets will also suffer. You will experience a flight to quality with bunds, to a lesser extent, maybe treasuries and gilts, they may benefit. And if Greece makes the payment on time, I guess a limited relief rally in Greek assets. But of course, the market then will focus immediately on the next payment in 3 weeks' time. So as ever with the Greek situation, it's a long, drawn-out affair. On to the data and events this week, as I say, very much overshadowed by the Greek negotiations. It seems like it's a never-ending story, but that's the way we have to report it. It's non-farm payroll week, so it's a busy week for data culminating in the employment data from the States. We've got manufacturing PMIs, some already out, as you can see. Poor data from the UK manufacturing PMI, missing the 52.7, coming in at 52, putting pressure on sterling. We have rate decisions in Australia, UK and the Eurozone. So quite a lot to go through. Let's have a quick look. Really, we've already dealt with most of what's happening on Monday, the 1st of June. The ISM data will have been out by the time you listen to this, but we're expecting 51.9 there. Overnight, we have the Reserve Bank of Australia meeting, the monthly monetary policy meeting. The Governor, Glenn Stevens, noted in his previous statement that additional cuts might take place in order to sustain growth, but I don't think we're going to get anything this time around. But it's certainly the talk has continued to undermine the Australian dollar, which has continued to fall on the exchanges. Okay, probably the next one we want to look at, services sector, first of all in the UK, remaining quite buoyant, although a little bit off from the 59.5 in May. 59.2 is the forecast there. And then we have the ECB's monthly meeting actually happening on Wednesday this week, Wednesday the 3rd. Again, we're not expecting anything there. normally the press conference adds a bit of fireworks to it, but really we're not expecting anything too much. They're certainly going to keep rates and policy unchanged. In between time, though, we have the first reading on the employment situation in the States produced by ADP, the private payroll company, that is forecasting certainly a jump from May's number of 169,000 to 200,000. Trade balance, not so important, although it's highlighted red here, 43.9, so an improvement there. Services sector in the US, or referred to as ISM non-manufacturing, again, similar to services sector in the UK, forecasting a small pullback there, 57.1 versus 57.8. Next, we have the UK's MPC meeting on Thursday. Following the deflation, the negative inflation or CPI number, there was absolutely no chance of any change from the Monetary Policy Committee here in the UK, and they're certainly expected to keep rates on hold until at least the first or second quarter next year, if not beyond. So all unchanged from our own MPC. We then jump to Friday, which is the main event of the week in terms of possible impact on the market, the non-farm payroll or unemployment rate. We're looking for an improvement, but only a very modest improvement. But what tends to happen with a lot of this data is that they do correct, and you get an adjustment to previous numbers. So that'll be quite important to keep an eye on. And sometimes they adjust 1 or 2 months back, so the overall impact may not be quite what it seems right at the beginning. Nevertheless, we're looking for the unemployment rate to remain unchanged at 5.4%, with the number of new jobs at 226,000. Still not particularly strong, still not enough to really push the Fed to declare their hand in any way, at least not at this stage. And we also have OPEC meeting, of course, which will be deliberating about the oil price, and we suspect that they'll continue to put pressure on oil prices and continue to try and protect their share of world market. Although crude oil prices did jump on Friday last week, which is one of their biggest rallies they've had for a good few weeks, on a bigger than expected drop in US oil rigs in operation, which has encouraged a few long trades. We will see by the end of the week. OPEC does and can surprise us. Let's wait and see. Thanks very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.